Today is Tuesday, January 25, 2022. Another wild day. Expect some of the same thing, volatility for the rest of the week, at least. I'm sure it'll carry on until the following week also. Let's look at the charts. You're looking at the daily chart of the S&P 500. Today, it found resistance up here under the 200-day moving average and below yesterday's high. Although I expected a little more follow through to at least break above yesterday's high based on that strong close yesterday. That didn't happen. It gapped lowered, sold off, quickly bounced back, and retraced, and it closed right around that support area around 43.50 to 43.60. For tomorrow, same levels that I'll be watching, the same level that I mentioned yesterday. It actually acted as support today. So for tomorrow, that will be an important level also. Breaks down below that, and the next level will be testing yesterday's lows. I think the easiest trade was yesterday on that reversal. Now up here, there's lots of resistance. You got all these pivot points, resistance, moving averages, and then the Fed FOMC tomorrow. So expect lots of volatility tomorrow. I really don't expect much in the morning until they announced their report at 2 o'clock Eastern time. That's one of the reasons why I liquidated my position. I did not want my quick profits to evaporate and end up taking a loss. For me, the Fed FOMC meeting is similar to earnings when it comes to stocks. You don't really know what the Fed is going to say, and it's almost impossible to predict how the market is going to react. So for me, if there's one day that I hate trading, it's Fed days. I don't trade that day until after the announcement. Sometimes I wait until the close, and definitely not the day before. So that was the main reason why I decided to just liquidate my position. Many times I'm watching a setup, and then I get either a sell signal or a buy signal, and I don't take it just because it's the day before the Fed day or it happens that day in the morning. So that's the reason why I hate those days. I shouldn't say hate, I dislike. Let's now look at the NASDAQ 100. I also liquidated this position. It triggered around the same time I liquidated both the NASDAQ 100 and the S&P 500 exactly at the same time. That was like 30 minutes before the close. So I actually got a good price, and it was near the high of the day. And for the same reasons, Fed day, like I said, it's just a gamble. I do not want to deal with the volatility. My unrealized profit can quickly evaporize, and I end up taking a loss. So I don't want to deal with that volatility tomorrow. But this one behaved very well technically. It found support around the 14,000 level and resistance around the 14,400. And as I mentioned before in previous videos, I don't see much resistance nor support, no pivot points between this level and that level. I mean, it's a 400, it's a 400 range, and I don't really see much of resistance nor support. And I'm talking about this range right here. If you go back in June, it just kind of went straight up. So I don't really see any major pivot points. And it's still the case now. Levels that I'll be watching tomorrow will be the same. I don't think I'm going to do any trading until probably the rest of the week. I don't know. We'll see. but I expect lots of volatility, especially if tomorrow we start pushing above all these pivot points. I expect lots of resistance. I think the best case scenario is if we spend more time around this area, consolidate a little, and then either push higher or down south. But I think either trade, either up or down, will be very wild. So I would expect very quick profits with very wide stop losses. So most of the time, if that's the case, then I try to just stay out of it. Why? Because my position size will be very small, and either way, I lose small, or my profit is going to be small. Sometimes I just like waiting for a better opportunity where my risk to reward ratio is better and the outcome is more predictable. And when I'm talking about predictable, I'm talking about if I'm going long, that I don't see much resistance up north. And if I'm shorting, that I don't see much support down south. Moving on to the Dow Jones Industrial Average. This one, same levels mentioned in the previous video. Found support around this area. I don't even think I mentioned that in the previous video. I think this is a new support level. But anyways, found support around this level, which is that right there and here. So for tomorrow, definitely will be an important level. That would mean breaking below today's low. Can definitely quickly sell off to test the lows from the previous day. Um, Up north, definitely will be that level again. Oh, and the 5 day moving average. That's where it found a resistance today. So that was, I would say that was bearish. Just the fact that after this big sell off and it was able to find resistance there, that is not good. I thought it would just push through it without a problem, without a pause, but that was not the case. So, not bearish, but at the same time, like I said, I thought it would be stronger. So, I would say neutral to bullish. Let's take a look at the Philadelphia Semiconductor Index. On this one, nothing has changed as far as support and resistance is still under the same pivot points. Should have acted as support. Since it gapped down, it acted as resistance, that 200-day moving average. So that was bearish. Just the fact that it was not able to get about that level, that was very bearish. But at least it found support around this area. So little things that I'm seeing, different indices. I'm not very impressed with the price action. Maybe it needs a little more time. But based on the close, it closed near the high of the day yesterday. I expected a little more follow through to the upside. That didn't happen. It was a big gap down in the morning, sold off, went back up, and then sold off again. But we'll play session by session. But today was not very impressive. But that can change very quickly tomorrow. FOMC meeting can definitely make a big difference either to the upside or to the downside, but definitely expect lower prices or much higher prices versus today's highs and today's lows. Now take a look at the Russell 2000 IWM ETF. This one, believe it or not, I'm watching it very closely because relatively speaking, it's been stronger than the other indices based on the fact that it's already testing the 5 day moving average. Today, it tested the 5 day moving average, got rejected, and it pushed lower. So for tomorrow, we'll definitely be watching that 5 day moving average. The support level here between 196 and 187. If that fails, then I don't really see any support or strong support until the previous day's lows. I will not necessarily trade the IWM, but I'm just looking for clues. So based on today's action, that it failed at the 5-day moving average, Dow Jones failed the 5-day moving average, the not the Russell, the Philadelphia Semiconductor Index fell at the 200-day moving average, so that was bearish. If tomorrow they all can break above the levels I just mentioned, then that will be very bullish. That has been my analysis for today. Thanks for stopping by, and good luck trading tomorrow. Thanks for watching.